was simply understanding U.S. and China law and the U.S.-China treaty. Everything I did was legal. It was because of the U.S. law or China law, which was poorly drafted or they just missed something. But that was my job, to try to find these mismatches and then to plan a transaction to minimize the tax. But the reason I did it was because the U.S. tax rate was 35 and the country where I wanted to do a transaction was less than 35, so I could create a tax savings. But if it's down to 21, wow, there's no reason to do what I'm doing, right? Right? Think about it. If every country was 21, would I have a job? No. Right? Okay? And so that's why there is no incentive anymore. It used to be 35, so I would do my BEPS planning anytime it was less than 35. Whether it was 34, 33, 32, 31, I could create a tax savings. But now when the U.S. is 21, the only place I'm going to do it is where a country where it's lower than 21. How many countries are there lower than 21? Not too many. And that's why the effect will be to stop BEPS activities, at least by U.S. taxpayers. Okay, here it is. Attract foreign investment to the U.S. assets. I just gave you the example. If you're in China and you had money to buy real estate, right? Buy stock, for example. Why pay 25 if you pay 21? Assuming you can bring it back to China and not have to pay taxes. I don't know how that works, China law or the U.S.-China treaty. But it's up to your China tax advisor how to tell you how to bring it back to China. But at least on the U.S. side, it is more attractive for you to invest in the U.S. Because the U.S. policy was we want capital to flow to the U.S. Attract foreign MNEs to do business in the U.S., especially when the U.S. or North America is their target market. Why pay for shipping costs when it's already here? Right? Particularly if your profits, you can shift through transfer pricing your manufacturing profits and your sales profits to a place where it's only 21%. Right? Force other countries to lower their corporate tax rates to below 21%. U.S. is basically telling the world, if you want us to do business in your country, lower your tax rate. Because if you don't, we'll just do business in a country where it does. Because already, I will not do business if it's over 21. Because I might as well do it in my own country. Okay? I'm asking these questions to force you to think. You're going to be the future decision makers for China and China companies. And you're going to have to deal with these type of issues beyond your control. The U.S. is forcing China to do something if it wants to be competitive, if it wants U.S. business. Think about if you were advising your government, what would you do? If you're advising a huge China company, what would you do? Okay, moving along. Okay, we're just guessing. I am just guessing of what's going to be the effects in China. The lower U.S. tax rate will make the U.S. manufacturing industry attractive to investors. Why? Because they pay less taxes. And because it will attract capital, U.S. manufacturing companies are going to improve. They're going to spend a lot of money in equipment and training employees. The U.S. already has one of the best capital investments. They have what's known as expensing. where they don't depreciate, you expense. You get a 50% expensing deduction up to $500,000. What that means, if I buy equipment up to $500,000, I have a $500,000 deduction in the year of purchase. That is a great tax benefit. And all it wants you to do is buy the equipment, expense it, and next year buy another. Because you can expense the other one in year number 2. Now, if that's your situation, don't you think after a while you're going to get really the best equipment there is in the world? That's what the U.S. is doing. Next one is lower U.S. tax rate will increase U.S. manufacturers' profits. One, the industry attracts investors. Now the individual companies are going to be more profitable. And if they want to remain competitive, what are they going to do? Invest their equipment in people. And they now have the money to do so because their taxes went down from 35 to 21. And here's the million-dollar questions Frank and I kind of came up with. Do you foresee a lower China corporate tax rate? Okay, and the worst one is, let's assume you don't. Do you think China can compete without a lower than 21% tax rate? Well, what do you think? And remember now, the U.S. has more money. It's attracting capital. The U.S. companies now have more profits, which they're going to reinvest in their own companies. Okay? And all of this is occurring because President Trump was able to pass, unexpectedly, this tax reform. Okay, everyone is very somber. Okay. Let's open this up. If your people are willing to spend the time, let's hear your ideas. What's going to happen? Let's look at the last 2 questions I posed. China has to respond. Can you continue taxing at 25? If you reduce the 25 to 21, where are you going to get the revenue? You may have to increase your VAT. Right? The China government needs money to provide goods and services to its people. If it doesn't get it from the corporate tax, where are you going to get it? Individual. How about individual tax? Do we increase the VAT rate? Do we increase property taxes? Do we tax certain industries which are highly profitable? Because we need the revenue to provide you the schools, the roads, the airports, and the like, right? Those things are not free. Unless, of course, you issue bonds and the U.S. buys it. All right, what do you think? You guys are all smart. Come on, what do you think? Somebody tell me what they think. Otherwise, I have the prerogative as a teacher to point. Okay? You, what do you think?
I think it will reduce their corporate tax.
Okay, if you do reduce, where are you going to get the revenue from? Yeah, okay, you say reduce the rate. They were getting 25, of every dollar, they had 25, now they're going to lose 4 cents. Should they cut the budget for schools by 4 cents? No, right? You're a student. So where is the government going to collect the other 4 cents?
Rich people.
Where?
Rich people.
Oh! You mean you're going to impose a personal income tax? Okay. Is your parents going to want to pay a personal income tax? No. Why don't we increase the property tax? So the homes you're buying in Shanghai, it just went up by 4%.